Okay, thanks a lot, Derek. In Money Tuesday, a compromise appears in the works for Bush-era tax cuts, but will Congress act on the state taxes and all the others? It's a question that has many financial advisors on hold right now. Stewart Welch joins us here from the Welch Group. It's always good to see you. Thanks so much for being with us today. Let's back away and let's look at it on kind of a big picture. You got a variety of things. You say one of those notable compromises, if it passes Congress, is a one-year payroll tax reduction of 2%. That could be big money for middle-class families and working-class families.
Well, it actually helps everybody. It's if you make $50,000, that actually means $1,000 to you. If you make $100,000, it's about $2,000. So it's really the surprise of this compromise because it kind of came out of left field. And so I think that's a little bit of a bonus for everybody. Okay,
that one's out there. A variety of other areas that we heard Doug Luzada reporting on earlier. Let's talk a little bit about the estate tax, because you say that's one that's kind of been on again, off again start. People not really sure where the government's going to fall in that in the long term. And because of that, it's kind of created a lot of problems for a lot of people in their estate planning, right?
It has created total chaos. And this year, there was zero estate tax, so you had a number of billionaires who died, and their families will pay no tax. Next year, it was set to drop to the exemption amount would be $1 million. Everything above that was going to be taxed at 55%. So under this compromise measure, they're going to raise that exemption from $1 million to $5 million. If you're a couple, that would actually be $10 million before you'd be subject to any estate tax. That's about as much as anybody had hoped for, either on the Republican side or the Democratic side. And the maximum tax rate, instead of being 55%, under this compromise measure would be 35%.
And that was a surprise. I mean,
that was also a surprise because the talk had been 45%. So there was a lot of good news in there, I think, for people that with large estates.
But bottom line with this and a variety of other things, you say it's still, because it's only a temporary fix at this point, nothing long term here that's been said, no permanent, all for over a 2-year extension period. It still raises a lot of concerns and questions for folks and kind of any kind of estate planning.
You know, Rick, it really does. And from an advisor's perspective, from an estate planning attorney's perspective, you're still not really certain how this is going to play out. However, you know, it gives everybody hope that what's going to happen over at the end of 2 years is that they will address this early and they'll solve the problem in time so that we don't have a lot of chaos beyond that.
All right. It's good to see you as always. Stuart, thanks so much for being with us. Hey, getting you ready for the holidays. We get